statistics you've just shown, it is clear and important that you have a CCP in the market. All you need to do is make sure that as regulators, we put on regulations that are market-friendly, but at the same time, taking care of the situations that will arise if you have the other side of the game playing.
Thank you very much. How are we doing with time? Shall we open for the questions to the floor? Huh? Sorry? Shall we open the questions to the floor? Yeah, let's open questions to the floor. Any questions from the floor? No question. We'll come later then. Yeah. Okay. So let me. Sorry. So I confused you with
It's fine. There's no problem.
I apologize for that. So back to the regulator, because I'm very interested. So you already, you have two markets in Nigeria. How you plan to tackle the issue that you have two markets with different products to be traded? Are you going to allow interoperability? You're not planning to provide interoperability or not?
Interoperability is a key factor in an efficient market. So as regulators, one of the things we always want to do is to provide a level playing field for all participants in the market. Take it that, combination of businesses or the interaction of businesses is a business decision. But in as much as that is the case, what we expect that market participants will involve in is an efficient market that will not have dislocations and distortions. And in these times of fintech and financial technology usage, it's no gainsaying that cooperations among participants is highly essential. And for regulators, ours is to provide a level playing field and to create environments where people can discuss civilly and making sure that the market grows better. We are in very good discussion with the Central Bank of Nigeria, especially with regards to the CCP, because of its risk aggregation status. And so if, as regulators, we are having that relationship, that good relationship, to create a market that is useful, a market that is strong, a market that is reliable, a market that is dependent, then we expect that business people will also, toe the line that we are towing.
Thank you. So Lola, let me bring that the one issue that I brought during my presentation is, have you talked to the participants? Do they say we need a central counterparty to take the market to the next step? And have you discussed with them the possibility of them contributing with capital for that CCP, the cost, the additional cost they might have? Although we saw today that the total cost of transaction will be significantly reduced. Have you discussed that, and what has been the feedback?
So let me understand the question. You're talking about local participants?
Local participants, yeah. No, of course.
So what you will find is the couple of things that are key to local participants. Definitely one of them is liquidity and finding the real price, the efficient price discovery. So when you talk to local participants, they're very interested in having this in place. Whatever infrastructure that is required, they're willing to go with it. Now, are they particular about cost? Definitely. The market we're dealing with, it's such a market that you got to watch the cost you're going to be spending and putting out there before you actually commit to getting anything in place. So for the players, it's not a CCP or a no CCP place. If CCP is where it lands and that's the most efficient thing, then so be it. So the market is actually interested in the ability to be able to deepen the market, get more participants involved, and effectively it will reduce the margin they're going to trade, but because of the volume and because of the other counterparties within and outside the shores that is going to get into the system, players are willing to go with CCP if that's what the solution is.
Thank you. Rousseau, tell me. I'm sorry that I thought you were. I confused the depositor with the central counterparty, but what would be interesting for me is, can you tell us? You basically created a new depository in South Africa. So how was the process of building that infrastructure? How much support you had from other participants, for the participants to build it?
My situation with the South African market was one of deep frustration. We learned from the perfect integrated vertical model that the FMDQ represents. I think there was an attempt in South Africa through the Johannesburg Stock Exchange to create something similar, and they've heard that this works perfectly somewhere else. The reality is that we have a very professional and deep financial markets, and the needs of all the participants there were different, and the exchange's focus was not on serving to the extent the participant and the broker needs to the satisfaction of what the market requires. A lot of the issues that in the post-trade that has emerged were not effectively dealt with, and the market were increasingly more frustrated. So ironically, where Granite emerged from is I sat at a similar conference in Morocco in 2009, and a lot of these things get thrown around and good stories are told. The decision that we made at that point in time is with enough market support, we can create an alternative. So a vertical model has got all the potential to work. The philosophy that was thrown around in the South African, specifically the debt market, was what about a user-owned, user-governed model? Because if you look at who owns the CSD within South Africa, there's disproportionate. You know, the exchange owned 44.5%, and 4 big banks own the rest. There's no broker involvement, there's no other investor involvement, and who reaps the benefit of it? So when it comes to prioritization, unfortunately, the debt market, the cash market, and the bond and money markets were not really given the same prioritization. And that resulted into, from a clean piece of paper, you now have another licensee as South Africa, well supported. And then there's, I thought we have a breakdown there. Well, that's what we had in South Africa. So Granite emergence actually became a reality out of a frustrated participant base. And at this point in time, we have probably the 3 biggest banks that do settlements in the bond market for global participants, as well as for local participants that is supporting the new CSD. And the traction is increasingly more imminent. And it just shows that competition is not an unhealthy concept. It's not an unhealthy principle. There's now all of a sudden better service delivery from the incumbent CSD, the outreach to the market, the investor services increase. So I think I can't stress it enough. As much as we want to centralize and make sure the efficiency in operations as part of the gold logo is acknowledged, we need to recognize the fact that price war is not a bad concept overall. So yeah, wish us luck. You know, from a global perspective, if you look at the BRICS model, currently you have Brazil with 2 CSDs, you have China with 2 CSDs, you have India with 2 CSDs, you now have South Africa with 2 CSDs, and lo and behold, Nigeria with 2 CSDs. So at some stage, more than 1 CSD per country was not imminent.
My question for your local participants, South Africa, once you had the 2 infrastructures running, didn't raise the issue of cost of having 2 pieces of infrastructure in such a not such a large market? It's a large market, but you know, nobody raised the issue of cost.
The issue of establishment cost was privately funded, so there was enough appetite for investors to come on board. The migration of I hope it's clearer. The migration of transaction flow within the same cake has gone to a more efficient platform. The cost of trade is the emphasis that you've highlighted also in terms of why a CCP, similar to post-trade services for a CSE, has dropped at least 30 to 40%. So, and there's other efficiencies, operational efficiencies that we've introduced. So you also school more skills within your own market, because you don't now just have one secluded that sits with a pot of skills. Education for us is big, and there's also other peripheral services that we introduced through the CSD with the endorsement of the regulators, things that was just normally overlooked, and we're happy we can make that contribution.
I hope
sorry, Bernardo, you can. So sorry just to remind you, about 15 minutes left, and you may want to just touch base with the audience again if we do have any questions at this stage.
Okay. Does the audience have any questions?
Yes, we have a question there.
Over there.
Thank you. My name is Joe Mekilua from FMDQ Depository. We know CCP as an entity for risk concentrator. From your experience, have you observed any case of insolvency on the part of any CCP? And how was it managed, especially for the pending settlements of transactions? Thank you.
Anyone wants to take this, or shall I take it? Okay, yeah, there's very few cases. We got to go back. One, it's another record for Argentina. Besides being the country with more recessions in the last 80 years, we have a CCP that almost went busted in 2015. And the other case, it didn't go busted, but it almost went. And the other case, you got to go back to 1974 in France. La Caisse de Paris. Well, basically, the CCP went busted. And the two cases are very similar. The CCP tried to didn't follow international standards, number one. Did not follow international standards. In both cases, so it's very important to follow international standards on how you run risk. In both cases, the CCP tried, in both cases, the CCP did not ask for higher margin once they have one single participant concentrated all the volume on the sell side or the buy side. So usually international standards require you, as you have concentration, to start raising the margin requirements for that single participant. And the second standard they didn't follow is that you don't allow to open, you reduce the amount of new open positions they can open every day. So you require more capital and to open less positions. In both cases, in the case of 1974, with the case de Paris, the international standards that we have now didn't exist. In the case of Argentina, it did exist, but because that single seller was the central bank, the CCP said, well, it's the central bank. They can always print pesos and pay. But the new government came to place and they said, you didn't follow international standards, so I'm the new government, because one government was the one selling on the futures, and the new government was the one who was supposed to pay. And they say, you didn't follow international standards, so I'm not going to take the whole loss that you allow the previous central bank governor to create. So basically, they had to eat a loss of $1.5 billion, although they didn't go busted because everybody knew that suing the CCP, they were going to go against the government, and nobody did it. In the case of the La Caisse de Paris, in 1974, yes, it went bankrupt, basically, because the participants sued them because basically what they did in order to not to have to pay the loss is to adjust the settlement price of the contract. So they created big losses to all the participants, and that basically they were sued and they were basically went bankrupt. Those are the two cases. But there were all the cases that you will find CCP with problems is usually because they don't follow international risk standards, which are very standardized today. Any other questions? There was another hand over there.
Yes, I have another.
Go ahead. Yeah.
Good morning, everybody. My name is Shaya Obishason. I'm a managing consultant from Philips Consulting. Mr. Shelola talked about investment opportunities that are in Nigeria, but people are not ready to come. And for me, I analyze that to be political instability or economic instability. So my question now is, as professionals in this industry, how or what do you recommend to be the best practices to manage this, where opportunities are banned, but investors are few? And we heard you talking about the case of Argentina, and maybe perhaps South Africa in the last few years. That's my question. How do you manage it? Thank you.
Thank you very much. There are many reasons why investors go into a market, multiple faceted reasons. And some of them are regulatory, some are the operating environment, some will be the ease of doing business in that environment. If you look at the case of Nigeria, there are multiple things we can do better to actually attract these foreign investors to come back into the system. So when you say as professionals, one of the things we can do is to ensure market integrity. I think it's a key point that a lot of people will look at and ask themselves, this is where I want to go. So I can give examples. If you look at Kenya, for example, it's not that the yields are fantastic. It's not that the opportunities are even half as much as that of Nigeria. But a couple of things they've done right. One of the things they've done is they have an IMF program. So when international investors look at them, they know that they will have the required discipline, the required fiscal discipline, market discipline, doing the right things to ensure that market happens. One of the things we can do in Nigeria to make sure that Nigeria remains a viable place, one thing we cannot deny is the potential of Nigeria. We've been saying that for decades. One thing that is required is somewhere where you have an exchange, you have a CCP that international investors can see that forces the market to be compliant and do the right things, forces transparency in terms of pricing, ensures that counterparties I'm dealing with are wide and many, in one word, creating liquidity in the market. The more of that we do, the more you will see international investors be comfortable in coming into Nigeria. I hope that answers your question. Thank you.
Just to add to what Kaide has said, he's taken one point and talked about, I guess, market integrity. And I think for an investor, and especially a foreign investor, every decision to invest in whichever market is always cost-benefit analysis. There's no perfect market. So if you take maybe the European market, for example, and you think everything is perfect, they have connectivity with market infrastructure, and you don't need to push paper around, and they have international best practice. Well, maybe the returns aren't so good, and that's the downside of that market. And there are positives to the Nigerian market, and another of the things that we can do, and which we try to do, and as institutions we do through advocacy, is you try and import international best practice. So what are the things that we're not doing properly here? Maybe in terms of connectivity with the market, maybe in terms of just every area of the market. How is it done elsewhere? And how can we convince participants in this market, or the regulator in this market, or the CSD in this market to do things in this way, such that it encourages clients to want to come to our market and invest in our market?
All right. We have another question. Okay, go ahead, sir.
The regulation of the CCP is very, very important to us. And like I mentioned earlier, hence, when we expose the regulation, we expose it to the central bank, who is a major regulator in the financial space, to see that whatever we're going to put in to that regulation will meet international best practice and standards. And I make bold to say that the regulations we are bringing out for the registration and regulation of CCP in Nigeria will be second to none, because we have taken into consideration every aspect that we need to take into consideration, knowing exactly the nature of our Nigerian market. So for whoever wants to operate a CCP in Nigeria, you must be ready to meet the very tall standards in order that we are able to give confidence to international participants in this market, letting them know that, yes, a CCP in Nigeria is as good and as equivalent to any CCP the world over.
We have another question at the back.
One
more
question?
to make, sir? Yeah. Okay, go ahead, please, with your question.
We have another question here from... Okay, go ahead. Go ahead, please. And meanwhile, here we have a question from the panel.
Maybe while they're getting the mic to him, the question I wanted to ask actually was for you, Bernardo, as well as Leon. As international people looking into the country, what is it? And remember that the CCP becomes the risk that investors are going to look at. What will you want to see in a CCP that will, from the regulation, technical, that will give you comfort to bring in money into the country? What is it you want to see? What should be there? So maybe the other person should ask the question and then you can answer it together.
You want to ask the question and then we answer both questions? Okay, I'll answer the question meanwhile. From an international point of view, well, the first thing I want to see is that, as the regulator said, that I'm going to be much more comfortable if you meet international standards. Number one, because from the risk point of view, and number two, if I'm an international bank, I want to trade from my home office in the US or Europe, from the point of view of cost, to be able to bring my volume here and my business here, I need to have low cost of capital. So in order for me to have that low cost of capital, you have to be a recognized CCP, and to be a recognized CCP by Europe, the US, you have to follow international standards. So that would be a prerequisite for me. I want to address one issue that has been reiterated many times. And if you are an engineer, you don't want a circuit that has a concentration. Engineers like systems that don't have a bottleneck. Basically, if the system has a bottleneck, that's a problem, because if that bottleneck breaks, the system goes down. In the case, which is very different for the case of capital markets, for one thing I talked during my presentation, you need, in order to lower risk, we're not an electronic circuit, capital markets. Electronic circuits don't hide trades, don't hide risk, because they're machines. In capital markets, you need concentration to lower the risk. That prevents people from hiding risk, for hiding trades. So it's very important, that concentration, to lower risk. So that's something I wanted to point out, because the first thing that if I have a concentration from a point of view of an engineer, that's very bad for risk. The last question, please.
Okay.
Back.
Sorry, I'm getting you the microphone. 1 second.
I don't know if the regulator wants to add something about his question.
Thank you, Mr. Moderator. Tunde Okunle is my name. I work for PAC Capital. Counterparty risks is a major advantage of CCP. And over the years, we've seen some default here and there. And the defense that is available to CCP includes the margin, both the initial and the variation margin, as earlier discussed by Bernardo. My question is directed to Bernardo. Do you have another defense like the default contribution fund in Argentina? And if you have, what is the structure? Do you have to ask market participants to pay one-off fee or yearly fee to really address possible risk from market participants? And what has been the effectiveness of this default fund, if you have any, in Argentina? Thank you.
Hello? Hello. Well, this is great. I've been baptized twice in a week. Last week in Jordan, I was giving a presentation, and they called me Ronaldo, and now Orlando. But my name is Bernardo. But don't worry. I know it's not a common name here. Well, in Argentina, the infrastructure, follow international standards. But the problem was, and the default, and we follow the international standards we follow to manage risk for the CCPs, for the stock exchange and the derivatives markets, is the international standard, which is the waterfall. The margin from the broker, the client's margin, then you have the contribution from the broker to the default fund, then the contribution from the exchange to the default fund, then the other members' contribution, and then you have the capital of the CCP, and then you have the guarantee from the parent and non-cash assessments. So we had that. The problem was, in the case of Argentina, which is the most recent one, similar to the case of Paris, is that they didn't follow international standard, and the regulator was part of this scheme with the central bank to try to prevent big devaluation of to keep down the expectations of the FX. In Argentina we had basically informal market for FX and a formal market, and basically the difference was 50%. So the central bank was trying to keep expectations down by maintaining the futures price down. Basically, as the central bank was trying to do this on the exchange, and there was creating this concentration, and the exchange did not follow international standards, the regulator, because was from the same party as the president of the central bank, did not do anything when he saw that the exchange wasn't following international regulation. So the loss they created wasn't because of one single trade one day. The loss that was created throughout a period of like 6 months. So once they had to basically confront that loss, it was $1.5 billion, and the total capital with the total capital plus the guarantee fund and everything of the exchange was $200 million. So it was impossible to pay that back, basically. And so basically the answer to you is that the exchange did not follow international regulation, and the regulator did not do anything. They looked they didn't require the exchange to follow international standards. So as long as you follow international standards, and as long as the regulator forces you to follow international standards, that problem should never happen in Argentina, and it should have never happened in the case of La Caisse de Paris. In the case of La Caisse de Paris, the international standards were not as well known as today, and at the time there were much fewer international standards that you have today on how to manage risk. Okay.
Yes. Thank you very much. So, unfortunately, we have to wrap it up now because we still have quite a few other panel sessions. But please, if you can, put your hands together for the moderator and the panelists. I think they provided some useful insight that we can use. I was going to ask a few questions, but maybe I'll take that during the tea break. But at this time, please, I'll ask that all the panelists and the moderator step forward. And I want to invite Mr. Aku and Mr. Onodele to join them for a photograph and to also present some plaques to appreciate them for coming today. So we can start with a photograph. If we can just ask that you stand by for just a moment while we get the plaques. Please, could we give them to... Photograph. Those I think for now. So we'll start with. All right. We'll be breaking for tea shortly, but we'd also like to present some plaques to our earlier speakers, starting with the representative of the Vice President and acting DG of the Securities and Exchange Commission. Mr. Aku and Mr. Onodele, I will still need you to stay on stage, please. We want to also give some plaques to the earlier speakers. So if you could just stand by for that. Can we get the plaques? All right. So Ms. Uduku, if we can have you on the stage, please, so we can also give you a plaque. And in your case, you'll be receiving two, since you are also representing the Vice President.